Yo, what's good? We're back. We're back. Today is April Fool's, April 1st, 2024. And yeah, man, I kind of had some time to. One thing I always suggest to everybody, if you're an investor, if you're looking at markets and you feel like you're getting just swamped in every single day and you're doing a lot of hard work, trust me, because I've been there many times where I'm just like, man, I'm really getting after doing a lot of hard work. It's always nice to take a break, a week, 2 weeks, and then get back on it. So that's kind of the way that I've seen it as over the past few weeks, man. Really just making sure that my mind is in the space where it needs to be. And so I need all the brain cells working on all cylinders. Sometimes you got to rest. So with that being said, we are coming back this month. It's going to be a lot of content. Like if you guys are not ready, get ready, because here on the channel, we're going to be talking about a lot of deep value type conversations. I've never been a person to get on here and just give you guys fluff. I want to give you guys the data. I want to give you guys the information that's going to help you, not just a aspect of feeling. And there's been a lot of great things to feel good about. One thing that I think is really cool is the fact that we're sitting at all-time highs, give or take about 5-10% for BTC. And we'll talk about some of these other coins as well. But it's now becoming to feel a little bit more normal. Like it's not feeling like, oh man, we're so stretched out in terms of price. So this is a good indicator. This means that as these coins go from long-term holders to short-term holders, we're having a little bit of a break. And these are the pivotal times to pay attention to, because a lot of people are like, oh, what's going on? Things must be going wrong. No, sometimes you have to consolidate to keep going up. So this is a beautiful thing that we have, man. Today with this stream, I really want to talk about how to not be the April Fool. You'll be surprised when we start to get into these bull runs. People, yes, they may start to make some money, but what happens is they lose their foundation. I'm all about having first principles as foundations as an investor, not just within crypto, but having a rule set, having like an ode to the things and the processes of what you're doing. But it's easy to lose that when you start making some money, man. You get like less smart, it seems like. Yeah, for some people, right? I'm here to give you like that splash of cold water. Like, hold on, let me grab the splash of cold water. Come on, let's go. Make sure you're doing the right risk assessment. Make sure that you're still doing the research. Make sure you're doing the things that you need to see this thing all the way through, because it makes no point. It makes no sense to do all of this, make this money, and then you end up with a big fat L because you just start taking, major stupid, not risk, but just you get the L's when you do dumb things. And it's foolish, quite frankly. So there's a lot of traps out there the higher the price goes. So we're going to talk about the top 5 mistakes that people do, that people make within these bull runs. And I've talked about some of this stuff before, but I'm going to kind of re-explain it and give you guys the context, because we're actually in the midst of it right now. Yes, it's a lot of money being made in memes. Trust me, I've made some money already in memes. Now, I love it. It's great. But at the same time, we've got to understand, are you an investor or are you just here to play the lottery? There's a difference. You need to understand how to go about this stuff. So once again, thank y'all for coming through. We have some people in the chat, man. I'm really excited to just jump back in the saddle and really give you guys just this other contrarian look at these markets. Let me see what we got. Okay, yeah, we got some questions already. I'm gonna get to them for sure. Definitely gonna get to them. Let's actually hop over to these charts. You already know. You already know. But appreciate y'all for coming through. Let's go. What's good? Gains incoming? Yeah, you already know. They are. And that's the beautiful part about being an investor. I was having a conversation with someone the other day, and he was like, yeah, like I have my little business going. I think he's doing some things with some rental cars and whatnot. But he's like, man, but I want to leave my kids something. I want to be able to get them in the position to where they're not having to make some of these same sacrificial time sacrifices as he's doing within these long hours of work that I'm doing. And I'm like, yeah, no, I hear that. And then so I was like, yeah, man, well, the part of it is, yeah, you want to make some good income. He was talking about trying to get his credit right. Yes, that's a part of it. If you're in the debt laden system, like if you are taking a lot of debt, yeah, you may need to get some credit. But life is actually pretty good once you learn the game. And you'll be surprised in a lot of cases, if you stick with this crypto stuff long enough, you may never even have to take a loan ever again. That's true freedom. Like that's one of the things that a lot of people don't really understand about like American freedom or this life of saying, hey, I feel like I've done something that I can lay my hat on. Being able to say, hey, you know what, I don't need a loan, but I can go and have these basics of life, which is really a home, and I would say vehicles and just the things that you need on the weekly and monthly basis. But yeah, 90% of people are out here taking these products, these loan products, because they don't know any other way. The other way is work really hard, invest as much money as you can for as long as you can, and then boom. Now you got to get the fastest horse. We already know that's crypto. So I appreciate y'all. Y'all already know I'm going to give you guys the base layer of what we just need to do. It doesn't really need to be much more complicated than that. Like that's all of what most people are trying to do. So if you uncomplicate things, streamline your focus, and stay adamant and consistent, you'll be surprised at where you can go in crypto, not only in just a year, but like stack it up. Do 1 cycle, 2 cycles, be in this thing for 3 cycles, but by 2030, you'll be surprised. But most people are still trying to figure life out. You're just like, hey, I'm good. Looking to my left, looking to my right, everything's okay. So that's what we all want. That's what we all want, that time freedom, but that freedom of saying, hey, things are taken care of, and I don't have to slave away at a job, right? Unless you want to. That's another story. So cool. Yes. And so we got some questions already. Let's read this question real quick. So I've been following crypto for about 2 years now, but the past month was my first time I've had spare income to invest. So I've been DCing into coins I like, but I heard correction is coming. Well, one thing that I would say to any new investor, and let me actually see if I can go back on screen. One thing I can say to any new investor is just get in the market. A lot of times we're worried about this correction, that correction, or this going up in price. What should this price be in 5 months, a year? All of these questions are noise. Forget them. Your goal is to say, hey, do the research. And we're going to talk about this. Like you're trying to research at least 50 to find one. Do the research and just get money into the market. Like your first time in crypto, do the research first. Like, so if you've been looking at things for a couple years or a couple months, like definitely stack up that knowledge, watch these streams, learn the mindsets that you need to be in, but also learn how to do the research. Do research on 50 to find one and then get in the market. Don't worry about the corrections because you'll be surprised. Like I said, time is going to be the biggest component of this all. And the longer that you stay invested, the better outcomes that you're going to have. Now, that's not saying it's like, oh, just keep investing all the way to the tip top. We're going to understand market risk, but at the same time, we're not even there yet. So you got time. Spend maybe, I would say, another week or so just killing the research game, literally like killing it every day if you need to. And then say, okay, cool. Let me go ahead and just start to DCH this market. Maybe it's weekly, maybe it's monthly. It's up to you. But if you're just now looking at crypto or actually taking active steps into buying something, definitely gotta research and just get in the market, whatever your budget is. So, for example, not financial advice. For example, if you're someone that's making $4,000, let's say you got $1,000 extra per month. Okay, cool. $500 every 2 weeks as you're doing your research. But don't do that until you feel like you've looked at, I don't know, considerably at least 20 coins. And you'll find that you want to find a good balance. You want to find something that's a little bit more large cap, find something that's a little bit more mid cap, and then you can go ahead and find something that's just a little bit smaller cap. Not everything is just got to be your meme coins and all that kind of stuff. So learning allocation size is important. And we're going to talk about this. So yes, sir. Yes, sir. Okay. Yeah, for sure. Nah, I appreciate y'all for, the support. Thank you for having me back, Dan T. Yes, sir. Okay. So give us some hopium. Yeah, I got to give y'all a little hopium. We're going to start here with this Bitcoin chart, and then we're going to put around to several different things. So definitely have your notepad out and, keep up because we're going to be rocking. Let's see what we got. Soaking up the alpha. So I don't ride this all the way down. Yeah, because yes, that can happen. It sure can. So we're going to make sure we do this the right way. LFG. Let's go. All right. So let's hone in on what are we doing here? We're investing. Or you're looking at this and thinking about investing. So Bitcoin, and one thing I want to start to frame for us and to phrase is the aspects of looking at sectors and not necessarily on AI versus crypto gaming or not. That's not what I mean. I'm talking about market cap sectors. So, for example, you have, and this is a thing, if you guys don't know, let's educate today. There's a lot of sectors that represent the stock market, okay? And we're talking about sizing. So a lot of time we talk about the S&P 500 and we talk about the NASDAQ. But did you guys know that the S&P 500 just represents the large cap companies? The top 500. Did you know that there's a whole other index for the mid caps? Okay. So this is something that we'll look at today. And there's also an index that represents all of the small caps. And so even within crypto, there's large caps, there's mid caps, there's small caps. And one thing is we can see parallels between the two as far as movement. Where does liquidity flow to first? I'm going to lay that out for y'all because it can give us a little bit more insight and alpha on what may be next for crypto due to where most of the money is at. We got to understand crypto is very small. Most of the money is in these stocks and these other instruments that TradFi already has a hold of. Now, these ETFs are going to bring us more into parity with that stuff. Believe it, like, trust me. And so, but we'll look at these different sectors, large cap, mid cap, and small cap. Really quickly, Bitcoin. An interesting stat if we look at it. Let's zoom in. So we're sitting at, and this is the monthly chart, y'all. So what I have here is just the basic channel. It's one of these things that when you guys start to look at an asset, you want to look for something that's exponential. Like you don't want something that's just gonna come and it's gonna be like, okay, like it's going up and then it just does this forever. You want to see a continual gradient change moving to the upside. So that's what we have in Bitcoin. A lot of people has it as a risk on asset. A lot of people see it as a hedge versus inflation. It can be two things at the same time. But if we really want to look at it, this is the process of beginning that hockey stick moment. We are past a third of the way through this thing. Like if we were to look at this in, whether you're looking at it in thirds or quadrants, I like to look at things in thirds. We are more than a third of the way through this bull move. Okay. So the bull market, technically, it started back in 2023. We are like a year and some change in. And so now we start to get some expansive movement to the upside since October of 2023. And we have had 7 months of just bliss within crypto. It's been very nice to see. And so a lot of that was pushed forward before the halving because of the ETS, because of the spot demand due to, all of these people within retail, but even some of these institutions wanting to get a taste of this asset class within crypto. Bitcoin is going to be the first thing they go for. So as we see, we have the highest monthly close right here. It's pretty impressive. And, typically, like if we are to look at when we break these all-time highs, and this is just an anecdote. This is not like the biggest research piece that we can all take a look at. But, these are times where we may put around for a few months before we break out, or we just may break through. Either way, demand at this point in time is clear that people want the asset. we're going to talk about the halving dynamics a little bit deeper as well. We have so much to talk about, you guys. Like, y'all don't understand how many things that we had to talk about. But I digress. Before we move on, we'll keep looking at this chart for Bitcoin. Now, the interesting thing with this is as we move higher, the halving is going to be a narrative. It is a structural thing. It's a fundamental thing within, what Bitcoin does. But it is the narrative that people hang on to and they talk about. Oh, well, supply constriction. Just know that the halving is less effective through time because it's not as significant, because simply going from 900 to 450 Bitcoin mined per day, that's what's happening. That's pretty much it, is constricting supply. But that's not as significant as what we had in 2020, which a lot more Bitcoin is being mined, and then we went to 900. So we had 1,800, we went to 900. So with that being said, less of an effect through time, but yet it is a structural effect. We need to look at the spot demand that we have for these ETFs with this new supply constriction, and then have a qualitative analysis from there. But the interesting thing, though, with the narrative is, like a lot of people start to get their eyes upon crypto just that much more for that month. Now, this month, do you find yourself in the category of just chasing memes? Or are you looking at structurally, hey, where are a lot of my positions at? You need to manage your portfolio. Don't just look at things and say, all right, let me put a little bit more here. Let me put like manage your stuff. Like, go back and see, okay, hey, what is my cost basis for these 3 or 4 main core portfolio positions? Okay, where are these 3 or 4 core positions at in terms of, like, make a spreadsheet, for Christ's sake, please. Like, hey, how much gains do I have? You need to see this stuff granularly, the numbers that you've maybe either gained already, or I don't know, where you're breaking even from last cycle, who knows? But you need to look at these things just so you can say, hey, where am I at? A lot of people are like, all right, I have these coins, but I don't even know where I'm at. And I love the fact when I do my consultations, the guys that come prepared are like, hey, this is my percentage of what I have. Here's my cost basis for some of these coins as well. If they can do that, that's even better. But it's just like, put your time in on what you already have. Because what you'll find is, through the next expansive period, there's going to be some large and mid caps that do move, right? And I would venture to say that it's a smart thing to have some large and mid caps in your portfolio, not just smaller cap coins that are just moving currently. Because that is more seasonal than structural, if that makes sense. We see the same thing within stocks. Okay. So that's one thing to think about is, yes, we are at a crux of price discovery, but at the same time, we are at a point in time where, hey, on a monthly, we're still rocking and rolling. We'll see what happens after this month. We got 28 days left, and we'll find out. So key thing to think about. If we want to look on the Hatter, let's go and throw that. Let's throw it on the weekly chart now. So we are above the 100 week. We're above the 100 day. We're above all that stuff right now. And through this time of this channel, we have plenty of time below these points of availability to buy. So here, very consistent. So what we find is now as we elevate, it was us slicing through that liquidity off of, Luna and all that stuff happening with the deleveraging. And then now we have some time of chop. That's beautiful. Okay. Now, if we want to look at these things that I think that are important, let's look at fear and greed. Hey, where are we at? Are people on a weekly basis pretty greedy, pretty fearful? And then we'll look at some other things. So as of right now, really, since the beginning of the year, we have readings of, 84. We're currently at 93 for people being pretty greedy. That means there is spot demand. You can look at this clear as day. So we know that people want this, and it's been a constant demand. Typically, when you find yourself at these portions of the bull market, like, for example, here, you find yourself being in a position to where that demand stays for a little bit of time. And it's not only just for like a week or two or a month, it stays for 6 months, a year and a half, very long time. And so we're finally getting to that. Now with this 100-day look back, the interesting thing and something to think about is in the past 100 days and in the past, even 100 weeks is what this is counting, that we have entered that in 2024 of saying, okay, cool, versus, the time period subsequent before this cycle, this is the first time we've been here. If that makes sense, as far as this much greed in the market. And so that's a structural change as far as sentiment. Now you have to go and double check that. So you see that on the chart. Now let's go ahead and check that. Talk to your family. Talk to your friends. Hey, are any of them still talking about crypto? Have they mentioned anything? You'll be surprised. A lot of people still don't even know what the heck Bitcoin is. So we still not at that point to where, okay, let's go ahead and eject, because there's still not that much talk about it out there. So that's a good thing. So using multiple ways to get your sentiment read on the chart, and then actually in person, use your eyes and your mouth. Go talk to people. So now we have that understanding. Now from there, if we pop on the daily chart, we got to get some TA in, y'all. Like, it's been a minute. And so we really need to jump into TA for Bitcoin. Like I said, plenty of opportunities of ops to buy. Like, we got the tools in the Vaults of Crypto. Definitely check it out. Go to the website, vaultsofcrypto.com, sign up. It's one of the easiest things that you can do as an investor is get good quality tools. So we have that here with these invite only scripts on TradingView. And so, we had plenty of opportunities to buy these dips below the 100-day in this bullish run in 2023. So plenty of times. Now, if we take that off for a second, okay, and we start to look at this thing from a couple different angles. Let's throw up the RSI and the MACD. So we got the MACD, and we'll get rid of fear and greed, and let's pull up the RSI. So this is actually showing some good things from this movement. We'll throw on the Bollinger Bands as well. So, all right, cool. So one thing that has me pretty excited as far as how we have this constant bid for Bitcoin, especially over like the weekend. On the weekends, that has been pretty impressive because the ETFs are open Monday through Friday. But over the weekends, we find that we just don't capitulate because the people are just getting scared. Like, a lot of people have been holding this Bitcoin for over a year without moving it, which is nice. Like, that's really nice to see. But on the MACD, what do we have? Like, if we want to look at this, we have some downwards movement from not only the moving averages, so not only the moving average here lines, but we also have these bars that have had the biggest amount of capitulation in terms of like sell side pressure. So if we want to look at sell side pressure, we've had the biggest amount that we've had in quite some time. And we're talking about actual amounts of money that has been now taken out of the system. But what do we find is that price has stood still to an extent. Like, we haven't even really gone down to 50K at all in the 50s. We've just been trekking around the 60s. And that's not much of a where people have that unit bias, because people trip or they get a little crazy going from like 6,800, from 7,500 versus back in the day when we're at $750 and we go down to $680, when it's really more of a percentage down draw from the smaller numbers. So they're looking at these moves like the $8,000 move in a week or a day. Like, oh my gosh. But the volatility is normal. That's normal. Just so don't get like fooled with the bias in the pricing or the numbers being a little bit larger. Just understand, just look at the percentages, right? So a 10% move in a day ain't too bad. Now, as we kind of look at when have we had this much money being extracted from the system, and same thing, like it has been a long time, not since these price points we're talking about the last bull run. So not since these periods of time. And so I'm going to kind of guide us here a little bit. Not since this point in 2021 where we hit those couple of peaks. So we have early 2021 in January, March, we had this period in April, and then also May. So that first peak and prices were in the 60,000 range, 64, I believe, 65K. And so we have this point in time where we're looking at this and there was a lot of money being extracted from the system. We have subsequent things happening currently. Now, the beautiful thing is this was the top of the range, because there was a move from 3,000 going to about 70K almost, right? We have the move from 15,000 going to 70K, and we have this money coming out of the system, but price has stood still. That's a nice thing to think about, because there's still a lot of other people who are going to be touching this asset for the first time in the year to come, this year and next year. So that's a nice thing. Now, so we are looking at that aspect, and then we can say, okay, cool. What does the RSI tell us as well? So because if you kind of want to look at the little bridge that we have here, a price just kind of sitting on top of the bridge. It's the easiest way to kind of think about it. All right. And so we have some resilience as well with this RSI. The RSI sticking right above that 50% level or 50 level. And so typically when you're looking at this RSI, this is that period that lets you know that, hey, okay, if we find ourselves around the 50s with RSI and we're just chopping, these are like fair value, like as of like on the week time point, or like if you're looking at it from a weekly basis, like past 7 days, and you see this drop down on the daily RSI to that midpoint and just hold, that lets you know, okay, cool, we're at the fair value point over from the past week. Now, if we have some deviations to go below it, okay, cool. Now game on. Maybe DCA starts for you. That's what I would say, right? But the key thing is that we are having some type of structural foundation of holding. And because we're really going to go back. So this yellow box is going to take us to, the beginning of this bull run. So let's look at that data. We're not going to look at, well, this thing happened last time, and let's look at this market that we're in. So we'll take off the MACD. So this market that we're in for Bitcoin, we have just a few glances or periods of time where we didn't structurally hold above the 50 level on the daily RSI. So like here, this time period here, and the Hatter caught all of these buy ops, right? So definitely, use the tools that we got. This period of time here in August 2023, and then obviously here in January we had a little bit of a dip, and then we take off. So what do we find is that if we want to think about it, yes, this is a bullish move. Yes, it's structurally continuing to keep shape. We only typically have down draws of maybe 20%, but we spent more so like almost on the upwards of like 80 to 85% being more bullish on the daily basis than bearish. That's a beautiful thing. That's the accurate way to read this. Okay, like look at that. It's probably even more than that. Like almost close to 90%. And as far as like deep value, we haven't really got that because that deep value is 40 or below on the daily RSI. And then so we only had just small little bits and pockets to get extreme deep value. In the past year and a half, only 3 opportunities. So this is letting us know that there's a constant bid, especially since January of 2024, once those ETFs launched. Now we have that little bit of if we want to look at it a little bit tighter, we had that little bit of a dip here from 75K, which or was it 74K, give or take. We dropped down to 61K. Oh my gosh, it's over. Nope, we're good. We pop back up. Now we come sideways just for about a week. Now this chop is a good thing to see. What I would like to see as we kind of read the tape as it goes, no need to predict, just read the tape as it goes. If we start to break this Bollinger Band, right, the midline of the Bollinger Band, this is going to let us know, okay, all right, we may have some deeper value coming in on the short-term basis. So that's when you want to look at some altcoins. And so this is a really good way to take a good qualitative standpoint. Now, if we have a Fibonacci retracement from this move, where does that keep us? Where does that have us, right? And so we're not even to the 0.236. If we, like let's say we start to break down, which we did prior, but we would probably find ourselves creating a higher low because that's what we've been doing in this bull market. Now, if that changes, then we'll have to have a different type of analysis, different assessment. But, the reason why that we've been able to, have this type of movement is simply just because that constant demand for the ETF. But so, for example, we have this move from 40K BTC to 73K BTC. We pull back to the 382. That's normal. And that was an opportunity to, get a nice DCA in. And this is all of, we're talking about a week ago, right? All of this in here would have been solid DCA of us just saying, hey, okay, cool. A little bit of a drawdown, nothing crazy, no crazy capitulation. I've been saying for months at nauseum, hey, for everybody that's just waiting for this crazy correction capitulation, we ain't getting it this cycle. We may get something, but is it being a routine manner as far as price movement? The volatility is not that this cycle, and that's been proven for the last 3, 4, 5 months. So the trend is your friend. Understand the movement, and then if there's something that's contrarian or different than that, then you adjust for that scenario. But it's not your base case. Too many people are using the base case of big correction, big correction, when that's not what the data is telling us. So mistake number one people are making is not knowing fundamentals of investing. Find a base case that's accurate to the market that you're in. That's alpha for you guys. Hope you guys remember that. So with that being said, what's going to be nice to see is, yeah, sure, for all those that want to buy extra crypto or more crypto, and because holding value is the key of what we're doing here. We would like to see this, if we do break it, hold at the bottom of these Bollinger Bands here, and that's kind of currently about 63K, give or take. Okay. So this is trending sideways to upward, 63, 64K. We come tap that over the next week or so. That would be a nice place to hold. But once again, we find ourselves making, and that's why I really want to put this in channel. We find ourselves making higher lows. And so even with the smaller time frames, so for example, higher low, higher low. This one was a little competitive, right? But technically, this was a higher low here as well, where it came down pretty close to prior low, but it still stood, right? Even from the standpoint of looking at just from the month or two prior. So the biggest thing is what we want to do is just making sure, okay, cool. Are we keeping above 40K? The trend is not over until, or if we break 40K to the downside, the trend would be over from higher lows. The first thing that you need to do with your risk assessment is say, okay, if we do break this area here, so for this low, which was just about like 60K, now you say, okay, the shorter term trend is breaking, but the longer term trend would not break until we would go below 40K. Now, where we're at with this spot demand still being what it is, like on a net aggregate basis, these ETFs are still pulling in like 2,000 Bitcoin plus on average per day and just holding on it, sitting on it. So that net demand, it's kind of hard to see us coming down this low. And so, we've got to see that as like, okay, cool, we're in this upper basin. Now, I want to just really pay attention to price action between these levels in particular and say, okay, which one are we closer to? So what are we closer to? Are we closer to 60,000 or are we closer to currently, our all-time high, which is about 74? And so as y'all can see, we're at 70. So if you just look at it, we're $4,000 away from the all-time high, and we are just about $10,000 value in BTC, I guess you can say, away from this local low. And so what the market is telling us over the past week as we chop sideways is the constant bid is keeping us up. And so the likelihood from the risk management standpoint is saying, hey, most likely we would continue to go higher versus come down lower. That's what this is telling us. So that's like the most bare bones basic TA, but it goes a long way. Let's turn these into Heikin Ashi candles. And so what can we see from the Heikin Ashi candle standpoint is momentum. Momentum is saying, okay, we had some really good, comeback. And so we're looking at this coming back. And now we have some red candles saying, hey, we've slowed down. What we want to see is, especially once we look at like the first 3 or 4 days of this week, is if we start to see green candles, even if they're not very large, it's still going to be a bias to the upside. And the thing is, let me go ahead and type this out. If we break through these highs, liquidations are happening. So there is going to be over $1 billion in shorts that will be liquidated if we go past 74K. So remember that. And that's pretty easy to know. All you got to do is go look at the liquidation chart, which we've shown here on the channel. So a little bit more bullish than bearish currently, and things are looking to say, hey, we've had some relaxation, but we have a nice hold in price. So there's some TA for Bitcoin that I'm hoping that was helpful for you guys to get an idea of, hey, where are we currently at with that. Now let's talk really quickly and just kind of go through a couple things. Let's see, do we have any other questions? Let's see really quickly. Can you explain BankX big move today? Why would they provide liquidity for eHex on not, what I would say is like the movement for some of these people that are holding a lot of Hex. One thing I'll say is Hex ecosystem is very emotional, which I think part of that is a problem. But also at the same time, there's a lot of people watching, which is a good thing. Now, with these large whales, they're going to do what they're going to do. They're not big enough to send it to zero. That's the main thing you need to think about, right? Is there anybody that holds enough coins that you really have to be worried about? And as we can see, Richard holds most of the coins, and he has been doing the right thing. That's the biggest thing that anybody needs to know about Hex. eHex even as well. And market demand will come and go. As of right now, market demand is low for Pulse-Chain, Pulse, and Hex. Liquidity is going to come to this market overall. So I would say, as far as what they're doing with liquidity providing, they may be looking to have some type of an exit at certain price points. But I would have to go look a little bit deeper. But that's just part of the market, y'all. Like, I would say the bigger question to ask yourself is, hey, where am I at on my, like before? And I'm not saying this is you. The question that I'm going to ask myself in that scenario, if I find myself thinking about things like that, is like, hey, where am I at net on my position on Hex? Do you know? Do you actually know the number? Spend time on that, and you'll find that's going to help you decide what you want to do with that particular asset. Something to think about, right? So let's say, okay, cool. Ninja watching, all good, bro. All good. And isn't the, okay, so yes, this is key. So isn't when shorts, like when they're liquidated, that turns into them being forced bias. Let me break it down. So let's go ahead and go back. So the key thing is this. When people take a position in leverage and they have a collateral, they say, hey, I'm going to, have this collateral and I want to get some extra leverage on top of that. They're basically saying, hey, whatever happens from here, if this goes against my position, that collateral is gone. Like, that collateral is to the market maker, right? And to the place where they got the leverage from. So what we find is, whether you're on the buy side, the long side, or the short side, you're going to have a liquidation price depending on how much leverage you take. That liquidation price is tighter the more leverage that you take. So if you find yourself in the 5x, 10x, 20x, the leverage of what your collateral is, you're going to notice like your window of volatility that you can accept before getting liquidated is a lot tighter, versus if you just go 2x or 3x, you're going to be spread out a little bit more. Now, when people have this leverage and price goes the opposite direction of their position, it turns them into forced buyers. So to be able to feel that order the correct way, they have to then sell your collateral, right? And they take their fees. And then price goes the opposite way and continues. So basically, when a whole sea of people are betting one thing, man, they better not hope spot markets are doing something different, because all of that leverage will be flushed the opposite direction. And that sucks, man. When you have collateral and you're basically putting it up like that, and you can't get it back, right? So that's what happens. And so yes, we could see some leverage that could be flushed if we go above 74K. So cool. I mean, I'm fine with that. Like, I'm perfectly fine with seeing something like that, because I am a holder of a lot of coins that people like to leverage. So there we go. But let's talk about this talking point here. So one thing that I find a lot of people are in the midst of going through mentally is like, okay, they're making money with meme coins. I like I said, I've made some money with meme coins. But with that standpoint, Do you still know how to handle yourself as an investor? And the first thing about handling yourself is not making mistakes or limiting mistakes to where if they do happen, they're small to insignificant to your overall outcome of what you're investing for. So, I generally like to talk more about, hey, what not to do than what to do. Like, we know what to do. Get money in the market into good quality stuff, hold, ideally for more than a year. A lot of people who have not really had that much money before don't understand the value in that because they just want it quick. The value in that is this. Once you make a lot of money, that means you'll be taxed a lot. If you have never been taxed 50 or 55%, then you just don't know yet. I've been taxed 50% plus for many years prior, and it sucks. So you want to look at, okay, what are ways to mitigate that? How you mitigate that is just one simple thing. It's by being invested into whatever you have for more than 365 days. This is something that you need to learn. You're basically getting taxed on all of these little movements, moving this here, stacking this here, yielding this here, blah, 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 blah. Not saying blah, 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 but doing these things that continue to just add tax to your situation. And you're not going to make as much money as what you think because IRS going to say, hey, yeah, you made 500,000 or 200,000, blah, 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 blah. But all of that happens, within 365 days. So guess what? We need half of that. Versus precise moves, diligent moves, moving in a little bit larger in size if you need to at some time. Sit back, watch. Watching and sitting back is a skill. It really is. If you can do that, you find that you'll make less mistakes. You won't get caught up in the hype. Oh, I gotta make sure I get this. Let. You see, like, doesn't that even feel stressful? You're not gonna even be stressed, man. You can just go to sleep and say, all right, cool. Check up in a couple of days. Hey, portfolio looking good. All right, great. Just keep adding money to good stuff, and have your month or your two where you're doing some little bets, but have a standard. Like, so, for example, a standard may be that you could set for yourself. If you're feeling that oh snap, I heard about this stuff on base. Let me try this. Let me try that. Let me try this. Okay, you did that for a couple of days or a week or so. How did it go? Check back in a week or so. How's it going? But then do you find yourself trying to chase 3 more things on base or Solana? Oh, I got to get this thing on Jupe. I heard this pre-IPO. Okay, how'd it go? Then check back in a week. How's it going? And if you find yourself, so put a cap to it. Say, all right, if I'm going to do any degen stuff for the next 3 months, all right, it's going to be 3 times with these 3 set dollar amounts. And ideally, I'd say, if you're a person that's like, I'm not going to say not made it, but if you feel like, hey, you're worried about how you're going to pay bills, I'd keep it to hundreds of dollars, not thousands of dollars. That's it. And say, okay, cool, I'm doing this basically for the next 30 days. And then I'm going to take a break for, I don't know, maybe you take a break for 3 months and then reassess in Q3 of 2024. That's a good way to go about it if you feel like you need to do it. Because I'm not against taking some risks, some major risk. Like, major risk can come with major reward for sure, but keep it in a box. Keep it contained to where it's not going to, one, take your mind into the chase mode, but then also it's not going to structurally affect your portfolio significantly because you found yourself going from hundreds of dollars to thousands of dollars to tens of thousands of dollars, and you keep going, you put into something that just rugs or doesn't do anything of what you thought it was. You built all this stuff up, but now you have, money that, could have been allocated in a little bit better way. So that's a big mistake, is bad risk assessment. People not knowing, like I said, not knowing where many of their positions are, where they at net, but then also only focusing on what are the things that are going to make me the most money fastest in the next month or so, even though we're just, like I said, a third of the way in this bull. So you need good risk assessment, right? Research 50 to find 1. Next thing, what people are not doing right now, because I know, trust me, I'm seeing it, is where they're doing no research at all, right? Because when they are telling me something about whatever the case may be, even if it is a research or even if it is a meme coin, you can still research it. you can still say, okay, well, who made this? Right? What else? Okay, do you even know the circulating supply? Is there an emission schedule? These are things you can still find out. I understand that there's no intrinsic value. Value is going to be had due to the market demand, but you can still research it. So if you even find yourself just throwing your 3, 4, 500, $1,000, whatever, your $100, and still didn't do a lick of research, not even 30 minutes, that still is a problem. Yeah, you still can make money from it, but it's a horrible habit. Just because good things happen to you don't mean you have good habits. And as an investor, you must always maintain good habits. The people that have invested successfully, they don't make those large mistakes, because once you have a bad habit, trust me, it's going to get you. It's not going to be like, oh, it's going to be okay having bad habits for a year, 2 years, 5 years of investing, 10 years. You may be okay with having a bad habit here and there, but you keep having that bad habit 3 years down the line, or even next bull run, when you're not dealing with, whatever, hundreds of dollars, and you're dealing with tens of thousands or hundreds of thousands of dollars, and you still have that behavior saying, I remember this worked for me last cycle. So, my $300 turned into 30K. So like, boom. Okay. So now let's take this 30K and see if we can get to that 3 mil. You're going to be stressing one, but then at the same time, it's like, trust me, market's going to show you. So, and not trust me, trust in yourself to have good discipline. That's what I would say. Discipline is something that most people don't have. As an investor, is paramount, especially as prices go higher, because this is when all of the stuff, all the craziness is going to happen, where people are going to get scammed the most when the prices are taken higher. There's going to be even more rugs and stuff that seems promising as the prices go higher. So just know that. Keep researching. Next, if you find that you're just still relying on your emotions before even taking any type of analysis to it, no on-chain data, not even looking at a chart, not even going on Twitter to look at some of the sentiment, not doing any of the core valuable things that you need to do within crypto. If you're just saying like, man, I feel like this is going to happen. Yep, I see that coming in. I see that language being had. I'm looking at, especially over the past couple of weeks when I wasn't streaming, having conversations, is yes. And within the vault of crypto now, we are doing it right. Like, we're on it the correct way. We're not just chasing. But yes, those opportunities existed, and I know a lot of us took advantage. Like, even still on that whiff train that we've been talking about on the channel since it was like 30 cents. Yeah, it's past $3 now. It's what, $4 on its way to probably $20. So yeah, as far as getting a little degen, like, we've done that. Now, with that being said, you still need to say, hey, like, question, do you know your whiff portfolio? Where are you at net? Where are you at? What was your price point? How many times did you see it? Was it just a one and done? All that stuff. So, but understanding that, getting your emotions in check is super important. You've got to see this market as a ever fluctuating, it's a fluctuating chasm of people voting with their dollars and their emotions. We want to pay attention to the dollars and the emotions, but we don't want to be the ones giving the emotions to the chart. So definitely you got to keep that in check. Now, the other thing is, you don't want to spread yourself too thin in this market now. So that's another thing that I'm seeing, where you have core positions. And I talked about this last time, top 5 mistakes, but this is key because we're here now. You have your positions. You've made money in X, Y, or Z. You take some of those profits and you get into this degen that, this degen this. You're adding more tax implications, and half of these things are probably going to fail. What you'll find out is, boom, if you would have did nothing or just continue to ride till, we get a little bit more deeper into this cycle, you would have made way more money, but you thought you were smart by trying to be this trader guy or gal, whatever. That's what happens, because you might have made some extra little bit of coins or money, but same thing, now you're going to be in that short-term tax versus still staying in that long-term tax. There's another thing that we need to talk about is, being able to put money into the right places. Like, do you know about having a trust? Do you know about having a charitable remainder trust? These are things. Do you know that you can invest in the crypto into an IRA? And a Roth IRA in particular may be a little bit more helpful for you when you want to pull something out tax-free at retirement. You can do up to $8,000 a year. So these are topics, if you're not talking about it, if you're just worried about, man, I'm trying to become a millionaire. Unfortunately, you might be because crypto is so giving, you'll still make money, but you're not going to have a sustained path of being a great investor for the next 20 to 30 years. You're going to have some big mistakes. And the thing is, because you need to think about what to do with bigger amounts of money and how to handle it and how to go about it. And if you haven't had these conversations beforehand, they're going to happen after you make the mistake. This is how it goes. So I'm trying to have this conversation with you guys beforehand. So you need to think about that. As time goes on, depending on how old you are, even if you are younger, having a way to get, like, you're maintaining your value in this IRA, right? So killing inflation and all the other assets, and you could pull it out tax-free when you turn 65. Man, this is one of the best retirement vehicles that you can even get into. And so because a lot of the stuff that you're doing, just a brokerage account or whatever the case may be, or your Coinbase, or you're extracting money from crypto, you got to go back to an exchange. You're going to pay taxes. And if you don't, yeah, cool, maybe not. They may not get you this time, but the chance for audit increases the longer that you don't do the right thing. So just know that. So yeah, man, taxes is a big thing to think about. Now, outside of that, I would say the last thing that people fall into as far as traps go is they start to trust too many people. When you start to trust the words of every YouTube streamer, because everybody's in a good mood, you're making money, so it's easier to trust people. Like, it's easy to trust that guy that seems like things are just going great for him, right? Or her, whatever. It's easy, and you start to make a little bit of money with this thing. So it's like, you need to be less trusting the higher the price goes. So listen to less people, the higher the price goes. Like, if you've got like 4 or 5 streamers or people on Twitter that you're, looking at their information, their data, if they're giving an assessment of the market on a weekly or monthly basis, like, sure, right? As we go higher, like, you need to dwindle down on like the best 2 or the best 1. But more than that, trust yourself before anybody. Like, trust yourself before anybody. Now, how can you trust yourself? You trust yourself by putting in the time, the effort, getting resources into this market. So you got skin in the game, and managing your portfolio is how you're going to build the trust for yourself to start to make the right decisions. Learning the fundamentals of saying, okay, when are things overheated? When are they undervalued? How do I know? And look at that from 3 different angles. You can really trust yourself, and you'll be surprised that when you trust yourself, you'll make better decisions than other people, right? And so, a lot of times you need to build that up for yourself. In the Vaults of Crypto, I'm always advocating guys to say, okay, hey, you have a question for the group. Okay, I'm going to chime in. Somebody else may chime in. But did you backtest that? What do you think about that? We have to exercise these thoughts, because if you don't, guess what? It's going to be harder to trust yourself when you have more money. And you want to trust yourself when you have more money in your pocket before anybody else. And so a lot of people are not going to tell you that. A lot of people are just going to be in here and say, hey, trust me. I predict this. I say that. I feel that. I'm actually telling you, trust yourself, even before me. And you really can't go wrong with that type of understanding. But I get it. It's hard to trust yourself when you feel like you're just starting. So you want to continue to mature in that and continue to build that as you go, as these prices go higher. And that only comes through putting your time and learning. And so if you feel like you want to trust other people, that's why cryptocurrency was invented, to not have to trust as many people. So the thing that you're buying, do what it was created for, which was saying, hey, I want to trust myself. I want to trust code. And you make those decisions that are going to be meaningful for your life. And now you may ask for an opinion on what you're leaning towards, but you want to do that. You want to lean towards something first and ask opinion versus saying, hey, I'm lost. Point me to the guided light, So empower yourself is what I'm saying with that. Let's see. All right. See if we have any other questions. Cool. So let's jump over to the next thing. I got some more charts, y'all. Plenty of more charts. We want to look at different indexes. So for example, I'm gonna go ahead and pull up. Let me see here. I'm gonna go ahead and pull up some things that you guys may or may not know of, and we'll start here on Koyfin. So for example, when we're looking at assets, it's very easy to compare apples to apples, apples to oranges, pears to coconuts, whatever, right? But we also want to look at the magnitude of growth of where liquidity goes to first and foremost in this market. You know, there's $130 trillion in stocks. There's about 150 trillion in bonds. There's over $300 trillion of wealth in real estate. That's the numbers. So I'll say it one more time: 130 trillion, if no one told you, in stocks, about 150 trillion in bonds. And I didn't even talk about the derivatives, right? Derivatives is a whole nother thing. And we're talking about 300 trillion in real estate. So with all of these trillions, we have, a little bit under $500 trillion of wealth just in general. There's only one trillion in Bitcoin. So with that being said, we've got room for growth in this asset class. You want to be in that type of asset. Now, when we look at these other assets here, I have pulled up the NASDAQ, the S&P 500, and the Russell 2000. Let's talk about the Russell 2000. A lot of people don't really say much or even know what the Russell 2000 is. Russell 2000 is the representation of 2,000 small cap companies that we have an index for. So what do we find is that as of right now, technology, XLK, is doing best, right? So, and let's just look at a 1 year read. So the last year, as we look into this from the beginning of 2023, we find that the NASDAQ and technology are like kind in lockstep. Now below that, we find the S&P 500, when that's going to be like things that are within tech, some of this stuff, but there's other things that are not within tech that are in the S&P 500, right? Now that's going to be only up just about, just right around 28%. Now we have the top 2,000 small caps, but these are, smaller capitalization. Now you would think, okay, them being small caps, more liquidity that goes to them, the higher in price that they'll go. The rotation is the same within stocks. You're going to find it going to where the most innovation is and where the most comfort level is. So that's going to be tech in the NASDAQ. Then you're going to go to the tried and true. So the companies that are not just in tech, but have just been killing it over the past forever, 5 to 7 years. So that's like your magnificent seven, and the other stuff in the S&P 500, and then you have your Russell 2000. What do you know is that there's levels to this, right? Levels. So the low caps are not being fully touched, and we don't have that price appreciation from the low caps. One thing that you'll notice in crypto, there's certain coins that seem to mimic the liquidity flow. So there's coins that have the higher beta of liquidity flow, like technology in the NASDAQ. For example, we have coins that are just kind of like in that midline, which I would say, those are like the layer ones. And then we have a lot of these coins that really just still haven't even taken off yet, that are lagging a little bit behind, but they're smaller cap. But when they do go, they'll become in lockstep in terms of percentage gain. So I'm hoping us looking at it like this can help us start to see, okay, sectors. Think about sectors. Now let's look a little bit deeper here within the chart. So let's pull out a couple sectors. So we'll start off with, let's go here. So we'll start off with the S&P 500. And really, I just want you guys to look at the orientation of the chart. So we passed all-time highs for the S&P 500 a while ago, like a good while ago. And we've been up. And we can tell that momentum is just up on a weekly basis. Look at these candles, man, just ripping and running. We are in a nice bullish move. We haven't seen a consistent bullish move like this, and honestly, I don't know if ever, right? Like, we have one little baby red candle here, but we're ripping and running. So we have that. Now, as we kind of look, we passed all-time highs quite some time ago. And if you look at just the orientation of the chart, we have now extended past those all-time highs. And this is just the broad-based S&P 500, right? So these are larger cap companies, and primarily really the top like 7 are leading, this charge. So, okay, that's one way to say, okay, liquidity is moving and choosing larger caps. Why? Because look at the extension above, the previous all-time high. Things that have even a higher extension past the previous all-time highs, like we talked about, XLK. So technology sector in particular, XLK. You're going to notice that is, just a little bit higher than where the S&P 500 was. The S&P 500 was, kind of in here. Technology has, really gotten pretty expansive here, especially over like the past 3 or 4 months. So that's a nice thing to see. Now, let's also look at mid cap. So what you guys can do is write this down, y'all. If you guys want to learn to look at things from a couple different ways, look at now the mid cap. So this is going to be the S&P 400 index. Whoa, what? There's an S&P 400 index? These are going to be the mid cap companies only. Now, what do we see is that it's not really that expansive above their previous all-time high. So that means liquidity is kind of coming here, but not all the way. So what does this remind me of? This reminds me of where a lot of the layer ones are at, where it's not as expansive as Bitcoin in their charts. It's not as expansive as things like Solana or some of the stuff that's really been going pretty hard, right? I would say those are higher beta like the NASDAQ. But they're right there, it's like kind of, doing okay, but not, they're in like the middle of the road, basically. This is showing me the middle of the road compared to all the other indexes, right? And so that's one thing to think about. Now, let's go to the Russell 2000. So we got a question in regards to the Russell 2000. So question is, does the Russell 2000 index matter during a bull market? And you bet your bottom dollar does. These are small caps. Now, you want to see, because you all know it's all about the ratio game. If you ratio the small caps, aka like, see, this is like total 3 for the altcoins, ratio the small caps versus the S&P 500, that'll tell you a story. It lets you know that liquidity is trickling down to more risk on appetite. More risk on appetite means less go. The alts are running simply like the Russell will run. Because look at this, y'all. Like this is incredible. We have this point in time where, the Russell 2000 runs, it stalls out and it comes down. It's been in a very, like, if you look at this is a very, very, how do you call it? Almost freaky range. Like, just look at this range that is just ping pong for a year and some change. Ping pong, ping pong, ping pong. Broke it. Now, there's some liquidity here sitting there that it's going to have to break through. But if you're looking at this as far as sectors, it has not even gone back to its all-time high. So there's a lot of laggers, like things like Polkadot or, Kusama or, ADA, something like your layer ones that have been here for a while. They seem like they're just barely breaking out the range, just like this, versus like the Solanas and stuff that are like already up here and whatnot. So what we find is the stock market is giving similar signals and signs of that, crypto is right where it's supposed to be. And you're going to find different coins in crypto that are going to align with different sectors, aka within, price movement, I guess you can say, not so much market cap. So this is something to think about, because now let's go ahead and ratio this. So we want to ratio this. Boom. Russell 2000 against SPX. And let's see something real quick. Let's see if we get some good info. Boom. Boom. So typically, right, and this is going back a very, very long time. This is, man, I love looking at information like this, because typically, we're talking about since 2014, you'd very much rather have the S&P 500 in your portfolio than the Russell 2000 over the long haul. But we have these periods of time where we have some give back, basically where the low caps start to make some noise. This is probably going to be the more risk on time periods within an asset class. So like I see 2 points, and mind you, this is me doing this fresh live, y'all. I didn't do this before. But what I'm kind of looking at is, okay, with the momentum, there's 2 points in time that look like they stand out for me. So here, where we rip up, that's in 2016, going in 2017, and then continue through summer 2018. So let's kind of look at this period in time. And then when the rest 2000s outperforming here versus the SP 500. So we're looking at May of 2020 to March of 2021. So what may be helpful to see, hey, what's going on in crypto during this time with this ratio is looking at a standpoint of adding total 3 to the chart. So let's add total 3. Or we can look at the others chart, either one. So let's add that. Let's put that on log. And let's see if we can see any type of information or data that may be helpful. So this ripped up first, obviously, in 2016, going into 2017. Now, we didn't have too much of a reading for total 3 in that time period, but we see as this is at least holding steady with the S&P 500 that's showing to be risk on for crypto. When this is going down, crypto's going down, right? When this is holding steady, things are risk on for crypto. When this is going up, things are definitely risk on for crypto. So this is a nice thing to think about. Now, I am looking at how we look like we might be having this double bottom here, y'all. So a double bottom in the Russell 2000 SPX ratio is a good thing because it shows us potentially some expansion of liquidity coming to the smaller caps, which thus, will bring us some gains in crypto. Like this little rush of liquidity here in the Russell 2000 popped us off to get going as well for this movement within crypto in October. So if you want to look at this ratio into saying, hey, when should I buy lower, I would say cap type things? If you're in a stock market or stock market investor, it would be when you see the momentum dwindling down to the downside, holding, because typically at some point you'll have a thrust higher through the years, right? And so what would be helpful to look at would be the MACD. And this is on the weekly chart. So like you see that, okay, it's kind of holding and it's not digressing. So especially if you look a little bit tighter, especially since February, it's been holding and it's not been capitulating. That's a positive sign to go higher within the ratio. So with this ratio during those time periods, we see that altcoins typically seem to be doing decent. Now we need to go ahead and look at this a little bit tighter, right? So we need to look at every instance to confirm that, but that's kind of what we're starting to get a sentiment read on with that type of analysis. So these are things to kind of think about, right? Liquidity rising for the lower cap coins in stocks versus the higher cap coins in stocks. We probably going to see some of those correlations within crypto, and basically saying a more risk on appetite, right? So that's a good thing to make note of, and I'm definitely going to continue to definitely watch this expansion because these things are lining up pretty good. I like this. So there's a ratio for you guys, okay? So pop that onto y'all's watch list. Now another thing to look at: risk on versus risk off. So here's the alpha. Another chart that you guys can look at to help you learn risk on versus risk off is the S&P 600 stocks above the 100-day moving average. Okay, so what you're going to go type in is this. You're going to go type in to your trading view S6, the letter O, then H, all right? So what is this looking at? This is looking at those mid caps again, right? Plus some of the large caps. And we're looking at what are the stocks above their 600-day moving average. Now, I love this because it lets us know risk on versus risk off, but then also really good investable local lows to DCA into, and we use this for crypto. So let me give y'all the alpha with this. We'll take that MACD off for a little bit. Behind, we have the altcoin chart. So total 3 in orange. See if we can get this to mesh up for us. So what do we notice? This thing is really, really helpful for letting us know investable lows. And I want to put on a moving average here that'll help us see it even better. So let's see if we can pop on the 100-week moving average to finish this analysis off. We are smoking. We are getting it in. This is what the research looks like, you guys. I'm doing it for us, and I'm gonna continue to do it. But definitely come and do some of this yourself, and you'll see how it just helps you. Let's go. Boom. Let's turn this like orange. That way we can see it. No, let's go yellow. Yellow's good. All right. So basically, how do we read this chart? Looks like a whole bunch of icicles. Now, if you look to the right, it's at 66 out of what? 66 out of 1,000, out of 70. So this is a number 66 out of 100, basically saying 66% of stocks in the top 600 stocks are above its 100-day moving average. And we have the 100-day moving average here. So that's pretty good. Now, what are the time periods that we are in extreme, like, bullish territory? Let me give you guys an alpha. When we are above 90, and so it's not only just looking at the top 500. Let's include the mid caps in there as well. When we're above 90, we're like, okay, the market is in some nice greed here. But really, we start to see that start to really kick up when we get into the areas of like 80 and above. So let's go back all the way. Let's call it back to 2015, whatever. We'll go back to 2015. And we'll look at all the time periods of where we hit at least 80. And what you find is that's a small portion of time. Okay. So if you look at, and I'll make it make sense for us. What do I mean by a small portion of time? Basically, majority of the time, it is not above 80. Majority of the time is below 80. So less than about like 3 or 5% even, we find ourselves where we're in that extreme risk on movement. Okay, over the years, y'all, if y'all are tracking. So let's put that there, and then let's even just change this color so we can, get an idea of, hey, what is he talking about? What is Swerve even? Where's he going with this, right? So where I'm going with this is this. Let's turn this like blue or something. Cool. So where I'm going with this is basically saying majority of the time, first of all, a lot of these mid caps and large caps are below their 100-week moving average. There's a period where they are. So like, all of this right above this yellow line, but still in this blue box. So that's like that, period of time where, okay, they're doing all right. But it's very rare where we find them just killing it in this yellow box. And for brief periods of time, like the longest period of time that we've seen where it was, since 2015, where we've seen it was above 80 for a considerable amount of time, was from November of 2020 till May of 2021. Now, this is a good data point to look at. Why? Because that was the sentiment top for all of crypto last cycle. We've had little blips. So February 2023, January, we got that big old spike of liquidity coming off the lows. Oh yeah. Like we're back at it. Sentiment came back. There's money coming in. And we had that period of time where we were just there, and we're talking about, at the end of, 2023. Okay. So what does this tell me? Okay. What this is telling me is that we're still elevated. So we're still above the 100-week moving average, but we don't have crazy discount just like in front of us currently. What we find is we're going to spend some good amount of time above, we're going to spend some good amount of time above this 100-week moving average for the mid caps, even for duration. Because when you realize that we have spent, look how much time that we spent below the 100-day moving average for the SP 600. Like, that was dreadful. Like, y'all don't really understand, like, the bearishness that we faced this last bear market. That's a long time. Like, you don't see it staying down here for this long in any point in time going back to 2007. So, you have a little bit of that here in late 2007. So what we find is it's like a wave. When you spend considerable time on one side of the thing, you're probably going to spend a considerable amount of time on the other side of it. So this is a good thing. With the time to come, the next year and a half, things will continue because this is just a movement of liquidity. That's just it, y'all. So when we look at this from the standpoint, we're going to be able to see that things are on a scale of 1 to 10. How bullish are we? I like to do it like that. We're like at like a 7, 8, 9, and 10 still hasn't been hit. Like, so for example, a 9 and 10 is when we get to like 90, 92, 95. And 8 is when we get back into the 70s and 80s. So when you're thinking about, hey, am I DCAing into something fair value? The closer that you are to 5 is fair value, and below 5 is undervalued. So those are like the ideal times to buy something. So, when you're looking at this index, for example, the overall, mid caps and large caps are just barely getting into that overvaluation a little bit. So fair value is where you'd like to be, that and below for a good portion of your portfolio. But if you're just starting, so here's the mistake that you don't want to make. If you're just starting, you just don't want to be the person that's only investing in the 9 and the 10, right, of bullishness, right? So that's when an index like this is at like 85 and 90. You're at 66. So you just don't want to make that mistake of only investing during that time, right? There's a lot of people that only want to come and invest in the crypto, especially, when we were, hitting that other peak, right? And so that's the thing. You got some wiggle room before we get extremely bullish. So good chart. Definitely use this to your tool set, but want to know what makes it even better, adding additional tools to it. So let's pull out the Hatter. Now, the Hatter gives us buy and sell signals. Alpha, let's go. So basically, if you want to know, hence, when to buy your altcoins, when to buy all your good allocations, especially in a bear market or in an uptrend, what you want to do is pop this Hatter on. If we have times where we get below this 100-week moving average on the top 600 stocks in the stock market, it'll be able to give you a buy signal. If we're above it, it's not going to give you a buy signal. So that's for your protection, right? But since, we're talking about the bear market, it gave us flashes for July of 2022. Gets a flash for October and November of 2022. Gets that flash for May of 2023, and it gets a flash in October of 2023. You go look at all these dates. Go to whatever. Go to Ethereum. That's going to be like your best way of, let's just pull up on the chart. Let's just do that. So let's not guess. Let's just look at it. Let's pop up Ethereum. We'll go Bitstamp chart. New price scale. Let's go ahead and put that on log. All right. So all of these time periods, let's go ahead and put a nice vertical bar, and we'll see, hey, were those investable lows for you? And we're looking at the teal chart up top. That's Ethereum. And all of those were great investable opportunities, right? Buy signal there. So using the Hatter on other indexes for crypto is a good thing to think about, to add to your types of qualitative analysis and say, hey, can I get into something like this? And all these points in times were before we had any expansive run, right? Boom. And so these 4 points, this is a good qualitative analysis here. These are good things to look at. Another one that I put on the chart here before on the stream plenty of times is the index. So now getting a certain sector. So we're going to take the highest beta sector, right? Now we're going to look at the NASDAQ 100 stocks above the 200-day moving average. And we could see probably something pretty similar, right? Pretty similar. And so we've talked about this chart ad nauseum before. And so it gave us those opportunities. The reason why we're looking at this is because this is for those higher beta cryptos. and we found that a lot of them, really said, okay, cool. Once October 22 was done, they went off and they took off. And we didn't see any time periods of where they're below 20, or I'm saying as far as like this measurement. So we didn't see any time period where the NASDAQ 100 stocks on a basis for all of them where 20% of them weren't above their 200-day moving average since we're talking November 2022. So it's just been in this upper range. Now, what we had talked about previously is we typically spend a good amount of time above 70, between 70 and 90 in a bullish move. And so we had this period of time in October where it was like, hey, this is like one of the last calls to really get into some of those good old altcoins, and we sprung back. So the NASDAQ is holding pretty good. The mid caps are holding pretty good as well. We're more bullish. We're at 7 out of 10 than bearish, okay? And what we would want to look for is if we want to get a little bit more detailed, for example, for DCAs, would be, okay, if we even see the most like high beta stuff in the NASDAQ starting to fall off, crypto is going to do the same. And so you definitely want to take advantage of using the Hatter, even on like the daily, but using this index, the NDTH. And so, what we find is, like, once again, if we were to go ahead and put some vertical bars on here, we would find that this would help us, DCA into something like, Ethereum or whatever other altcoin that you may have done your research, your 5 to like at least 5 hours of research, at least. But you're thinking more like 10 hours, almost a whole day for some of these coins if you need to, right? We seen like in this time period of where we had the index going down to levels of like 55 and 45, that those are really, really good opportunities to buy into those alts. And that was August of 2023 to October. So once again, what do we find is what I like about this. So let's take off Ethereum in the back. So we get that this is helpful for using for crypto. What we find is that we are actually getting closer to this 200-day moving average right here in orange. And so what we would like to see is if we have any buy signals below this, you definitely want to use that to say, okay, this might be a nice DCA for my altcoins. So we had some, but we haven't really had too many in 2024. This is like just like the first chance that we really find ourselves interacting with the 200-day moving average here. So, the opportunities will be here. Sometimes being an investor is going to require patience. And once you've been looking for the opportunity that is like just for you, then that's when you deploy like not just a little allocation, like feel confident about saying, all right, let me take a nice swing, few thousand or 10 grand or whatever, 100 grand, whatever you're working with, but at a much better point versus, hey, when everybody's just like so bullish and feeling all good about this stuff. So yeah, using this stuff is going to be helpful. And I'm hoping that, we continue to dive into that research. Cool. So let's see. Do we have any other conversation pieces? Let's go look at the halving countdown. So we're within a month from this estimate. We are 18 days. Now, once again, narrative is one thing. Actual price volatility is another. We'll see if this little bit of a supply shock is going to affect this demand that we're having. Like I said, it's just about 2,000 BTC that are being, net positive in terms for the day due to these ETFs. So yeah, we almost there, y'all. Like we're getting close. And I would say definitely come and do a little bit of research on what this is. If you don't know, let me actually put this in the chat, and y'all can definitely jump on that. So Cool. Any other thoughts? Let's see. Question. I'm currently holding some fetch, but I heard about this new ASI coin coming out. Should I sell my fetch and wait to buy into ASI or hold my current fetch? Gotcha. Question is, where are you at on your net position on fetch? If you have a lot more gains, let's say you're up 5x or 10x, I don't know, you may consider taking in a portion of that and going to this other coin that you may have researched or may not. It's up to you, right? But what I will say is just watch yourself as you find new narratives and new opportunities and say, hey, how many times have I already done this in this bullish move? If you've sought out new opportunities already like 6 or 7 times this month, maybe slow it down a little bit and just wait for it to come out and see, okay, what does price action look like for the first couple of weeks, first couple months? I'm going to be a little bit more so on the side of saying hold on to what you currently have and focus more so on, hey, how do I make some more money? Like, what can you sell? What can you go put in? Maybe let's call it, 5 or 6 extra hours in at work this week. Okay, use that capital to go into this new coin because there's new risk because it is going into this first cycle. So that's what I would say in regards to that question. Let's see. Cool. All right. So I think we got the butter from the duck. We definitely got it today. I really appreciate you guys for coming through. Let me see. Is there anything else that we need to talk about? Mr. Bob Lucas, once again, showing us, that these cycles are playing out very succinctly to how they have previously. Don't get overwhelmed with a lot of the what ifs and the potential, hey, what about this and this correction? Like, just get money in the market.